Bob, it is great to have you with us today. Good morning.
Thanks for having me.
Are you surprised at either the price or the aggressiveness of Microsoft in the face of what we think is a tougher regulatory environment?
Yeah, so first of all, as you know, Carl, we're coming off a record M&A year, almost $6 trillion in global deals that was done last year. All-time record, really beating the previous record in 2015 of about $4.5 trillion, right? The U.S. also set a record, doing $2.5 trillion in M&A deals as well. De-SPACs helped a little bit, being about $600 billion of that as well, but just record amounts of M&A being done last year and continuing going into 2022, this deal being one of the big ones already that we're seeing. I think there's a couple different things that are actually driving this. One is clearly still very affordable interest rates, when you look historically, so great environment for that. Two, piles of cash on the sponsors' balance sheets, private equity, as well as the corporates as well. So there's a lot of dry powder there. You saw today's deal being all cash. And then number three, just as technology is changing around us, companies in tech as well as outside of tech are looking for new ways to engage their customers, new ways to reach the younger demographics, as John hit on, new ways to reach them, mobile, whatever environment they want to be in. And what does Web3 and the metaverse mean going forward? So we think you're going to see a really strong 2022 as far as it comes to more M&A.
Yeah, some have taken note of this line from Nadella, Bob, saying he wants to reduce the friction between content consumption and commerce with fewer constraints on distribution. Some argue that's an implied dig at Apple and Google and App Store fees. Do you see it going that way?
Yeah, I think regulation for big tech is going to be a big part of the story going forward. Lena Khan is leading over there with a mandate to really scrutinize a lot of the big tech players. I also think it's why you haven't seen some of big tech deals in the last year or so, because of that increased scrutiny. So I think any deal that is announced and moves towards getting done is going to have some pretty sound footing there. To be able to get these deals done and have, sizable breakup fees just in case the deals can't get done. But regulatory will be a big part of the story going forward, for sure, for big tech.
Yeah, Bob, as an investor, though, how should you handicap this? Because on the one side, the argument that Microsoft seems to be making is you fight giants with giants. Yeah, you got some strong gaming platforms out there. The way to fix that situation is for us to get bigger and open up distribution. But there is an argument to be made, and regulators here in the U.S. might make it that you just keep everybody from getting bigger, right? Either break them up or you cap their ability to do M&A. So as an investor, how should you kind of hedge your bets on which argument ends up winning out?
Well, what I think is interesting is you're seeing a lot of the large tech players really diversify their portfolio, right? From being involved with, OS systems, cloud, enterprise, gaming, et cetera, and really playing across a spectrum and not necessarily creating a monopoly or concentration in one certain area. And I think you're going to continue to see that happen as well. Also, outside of tech, look for other verticals to expand more and more into tech. And John, as you and I have talked about before, I think there comes a point in the future where tech as a vertical, sort of becomes archaic, right? As every single company out there will need to have certain tech strengths to be able to compete. So I think you're going to see more and more continue to happen. Obviously, with the stock's reaction today, you can see investors are putting a little bit of an uncertainty on the deal completion. We'll probably see it as we get more information on the regulatory side.